Good evening, everyone. Time for another silver update. Well, we're reacting to the events in Japan. Silver is forming kind of a rounding off pattern that you can see here. I've drawn a number of downtrend lines. First one starts up here. We get a more severe one here, and then we've got one here. Now this third trend line that we've drawn has now been broken to the upside. The other pattern I've pointed out is what I will call a descending pennant. So the question is, do we break through these downtrend lines to the upside? Do we break through this pennant to the downside? We're in a rounding off pattern, and the question is, will we round off or will we bounce and begin to rally? It's a tough call at this point. For us to continue down, we're going to have a series of violent down moves, such as this, and this. So that's what we are to expect. It seems that silver has been kind of reacting to the news out of Japan, but is all the news already, all the bad news already built into the markets? Don't know. The MACD is not really giving us any indication, neither is the volume. So this pennant here will kind of tell us we should see, if we are continuing down in a rounding pattern, we should see very soon, as in tonight or early tomorrow, we should see a catastrophic collapse. Something on the order of this. Actually, it will be a larger magnitude because we've got a move here. This move is from 36.25 to 35.50. That's a 75-cent move. This move is from 35.75 down to 34.75. That's a dollar move. And this move is from 34.85 to 33.65. $1.20, $1.30 move. So 75-cent, dollar, $1.30. We would expect something around $1.50 or $2 move. So the next move should take us to 32.50, I would say, would be the target. And if we pull out, that's going to be down around in here, which is some more support. We have a tested area. We did test before. So we're looking at the next shot. If this rolls over to 32.50, that's if all the bad news is calculated in already. Don't know, because I don't know the facts. On to the Japan issue. Couple of points to make. One, on zero hedge, we had Rule 48 invoked this morning on the New York Stock Exchange. I think the cash futures at one point were down 300 last night. I don't remember where we opened, but we didn't open down that much, and we rallied. Rule 48 pretty much locks the market up. That's a real surprising move, considering that the potential open was nowhere near circuit breaker levels. It seems strange that they invoked that rule. Nevertheless, they did invoke that rule. The TSE last night, when the market was down over 14%, invoked a rule halting the Tokyo Stock Exchange. So we're seeing government intervention to halt free trading of markets. Of course, I'm 100% opposed to that under any circumstances, simply because I think people should always be allowed to get out, no matter what the price. And usually halts don't do anything except cause suspense. I think these halts were created to give central banks time to get involved. And that brings us to our next story, which is BOJ injection of another 3.5 trillion yen. That's today, to add to the existing 23 trillion. So we're talking about 26.5 trillion, which is the equivalent of $325 billion. I said the other day that I thought that this would end up totaling about 500 billion to $1 trillion. They've already injected $325 billion into their banking sector. So is that a rough estimate of how much it's going to cost? Don't know. We may not have all the bad news factored in, so there could be more to come, but it seems like the governments are very worried about the markets trading down. I wanted to examine the question of whether or not we may be looking at a sort of a deflation scenario that was okay. There we are. That's where we're trading right now. I pulled up a couple of charts. This chart here is the Dow Silver Cross, and I just wanted to pull this up to try to look at some information if we can gather from whether we're looking at a sort of deflation scenario. If you'll remember this point right here, March of 2008, this was the Bear Stearns calamity. This is when Bear Stearns was folded into JP Morgan. They took over the hedge book of silver shorts, and it was at that point that silver from 21 collapsed down to about 17. Then silver pretty much traded sideways until we had the beginning in July of 2008 of the overall deflationary collapse. Now the stock market held on briefly until about mid-August, and then in September started into a free fall collapse. Then of course, if you remember, I think we had rumors of Fannie Mae and Freddie Mac, some other rumors of some firms being in trouble back here in the summer. But it wasn't really until the fall that all the news started coming out that basically all of Wall Street was bankrupt. So the news follows the market, always has been the case, and we did get a simultaneous drop of the Dow and silver once we reached that point. Silver had already fallen, but about in August we started both falling at the same time. The other chart is oil silver cross, and you can see at that same point in time of 2008 where we had the Bear Stearns collapse, we had a deflation scare in the price of oil. Silver trended sideways from that point on, but oil continued to rally very strongly from about $100 to $105 a barrel all the way up to the top of $145. And it was actually, more than anything else, it was the collapse in the oil price that went from $145 all the way down to about $35 a barrel in January. But the catastrophic collapse from 145 down to about 89 in a very short amount of time marked the beginning of this deflationary collapse, or this deflation scare, if you want to call it that. Of course, the deflation scare was met by a threat of martial law and Congress being blackmailed into printing up trillions of dollars for the banks, and that's where we got the liquidity that we got, and we got our rally from March of 09 through today. So the big question is, are we doing a repeat of the 2008 deflation scare, or is this just a little bump in the road to higher prices? One thing I will note is that you can see the big changeover from high oil, low silver to high silver, low oil. I don't think that oil and silver are correlated, and one of the reasons that I'm showing these charts is I think that silver is actually its own market. I really don't think silver has anything to do with these other markets, but because people tend to play these as inflation, deflation hedges, they tend to trade them the same. My best guess is at this point, this is a flash in the pan, and I think we're probably going to end up finding out that the news out of Japan is not as bad as the market had factored in, and we'll probably turn and rally from here. I'm still going to stay by my call of $50 coming up soon, but this definitely is a big blow to all the markets. I want to pull up the futures real quick to see what we did across the board. This isn't at all like it was in the morning. You can see that sugar is absolutely cratered, down 7.7%. Coffee and cotton, these were your big leaders. Sugar, coffee, and cotton, those were your big bull market leaders. And these others here weren't so much, although the grains were pretty strong. So the question is this that sort of deflationary collapse? It almost looks like profit taking in the leaders rather than a type of deflationary scenario. But we're just going to have to wait and see. The silver price is still only off. We're at $34.50. That may be cheap to some, I guess, from a high of $36.50, but really silver hasn't corrected hardly anything at all. You can see we have topped in the MACD and crossed for the amount of downside that we've done. If we can get to support here, which we're not too far off of, we could bounce, or we could go all the way back down. That would give us a test of roughly 31.22. We may go through there. If we go down, we may go through there, or we may bounce. I would pick this point as an interim buy point. If we do fall, I would be looking at 31.50 as a place where I would buy at least a third to a half of a position, and then I would look for roughly somewhere in the 26 area here. Probably wait to see if this area is penetrated to the downside. Maybe hold off, maybe get a third here, and if it continues down, looking for a catastrophic type of correction, at least from what we're used to recently, would be down around here. That would give you an average buy price of roughly, we've got 31.5 and 26, it's 57.5, and 21, just say 21.5, that's 58, and that's 79. So that would give you an average buy price of about 26, say. That would give you a position of about 26. That'd be a pretty good spot. $10 above our high. That's if we do get this correction. I'm not at all convinced we're going to get it, but we're going to have to watch real close what we do with this current flag, and if we have another catastrophic drop of roughly $2 is what I'm predicting if these downside drops continue. So we should see that tomorrow or tonight. If the news comes out of Japan that is fairly good, that's contained, we may see a snapback rally and see these lines broken. So we'll just have to wait and see. We'll talk to you next time.